WellPoint CEO Angela Braly resigned given pressure from unhappy investors. The G7 countries called for oil output to be increased as Hurricane Isaac and Iran tensions pushed up prices. I'm Lindsey Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street, and together we bring you the morning call. 6 of the last 7 trading sessions, the market has ended the day down. This morning, futures are pointing to another flat day. Volumes are probably going to be thin again, but some of the leaders are making moves. What's your game plan here?
Well, I think volume is down. It's the last week going into Labor Day. We've also had a big move, and people are not sure whether or not it continues or we correct. And we also have 2 major events. You have a Jackson Hole Friday. We have the ECB meeting. We've been seeing headlines come in. And at this particular point, I think the bears are looking for vindication. The bears are saying, you know what, you're going to get yours, central planning is not going to work, and there's no way we could sustain these gains. But what we're looking at here, as far as the chart, if you take a look at the SPX, I'm looking at a nice move from the June 4th lows, a nice move for the year, up 10% on both indices. Look at this move all the way to the upside. This has been the uptrend. This has been the gradual trend that we've been following ever since the June 4th lows. And then we had the accelerated trend right here that pretty much was a catalyst for what has been, the move in August. And then now as a technician, you look at this outside day that came in right around here when we pushed through 1422 and failed. And now, we're just kind of holding in tight. So if you're short, there are some guys that are short versus this high here, 1426. Okay, and then there are some guys that are long versus 1398 level, and that's the short-term fight. But overall, if we do correct into the beginning of September, this is really your macro level to watch, right around this uptrend that's been holding, right around the 50-day, which is about 1370 to 1375.
Do you think it makes sense to put some risk on here, though, given the uncertainties that we're expecting from the market?
I think you shouldn't be all in, so you should have some risk on, but most risk off. So right now I'm pretty light. It's been an unbelievable August, and you also had a great first quarter. So if you've booked your gains this year, or a majority of them, even if the bears resolve this to the downside, you did well because your money's in the bank, and you could also reduce your size here where you don't have as much exposure. So just in case we do pull back, you're feeling okay, or you're hedged. But if you have nothing on and you've underperformed this year and you haven't been involved in the market, and we don't pull back below 1398 and start breaking above 1416 or 1422 to 1426, and you're actually managing money, you're going to be out of a job. So there's a lot to look at, a lot going into the fall. I would say you have to have 1 foot in the market, 1 foot out, and just keep analyzing the data. And right now, it might not be a perfect world with heavy volume and major things going on, but there are leaders acting well. There are groups that are near highs. There are sectors that are above their 8-day and their 21-day, and those are strong signs.
In fact, in the sector spotlight, we're going to look at retail because despite consumer confidence for the month of August coming out yesterday and reaching a new 9-month low, the retail sector hit a new multi-year high yesterday. It's been on the run since August. What do you think about the group?
The group's been acting well, and there's been a lot of big mega cap stocks within the group that are rewarding investors, especially macro investors with an equity plan besides traders. You look at the RTHs, we've talked about this so many times on this show. Here is the uptrend that it's been following since June. Okay, then it finally started to accelerate on this gap up to the upside. It's above the 8-day, was at highs of the year. Definitely, along this channel, you take some profits considering the size of this move, but this has been a group to own. And again, above the 8-day, above the 21-day, not even near the 50-day, that is very constructive, especially if you're long. But if you're using a tier system, perhaps you went to tier 2 here, and then as it extends, you go back to tier 1. And then if it were to change and we broke the 8-day and the 21-day, maybe you lighten up a little bit more to see if we get some type of pullback. But this group has been very strong.
In fact, tomorrow we're supposed to get same-store sales for the month of August that are supposed to be pretty strong. We'll get numbers from individual retailers, Nordstrom being one of them. Their numbers are expected to be better than the overall sector because they had a nice shift in a big sales event. Their anniversary sale moved into the month of August this year, so they should do pretty well. This stock has been on an uptrend lately, but it's been consolidating at a higher level. Do you think this is a place we can get involved in this stock?
I don't think it's a place to get involved. I think it's a place to own and potentially trim. If you look at this stock, there's been times to be involved heavy, times to be light. And as you look here, the trend's still intact. You go to the chart, you'll see, there was an outside day that came in, in May right here when, you broke out and then it pushed your highs, came below and then quickly failed. And I talk about breakout failures as a way to get rid of your stock or get out of the way. And then we broke down hard. And then just like the rest of the market, it bottomed. And then since then, it's been riding the 8-day and the 21-day this entire way up. If you were a short-term guy, I would watch this 8-day. If we break the 8-day, you know what? A trend change and you could probably test a 21-day and get a move down here. I don't think you initiate a trade up here. Yesterday, couldn't break out, closed near the lows. So I would say at this particular point, be on alert. If you've been trailing this move long with anything more than a tier 2, I'd get to tier 1. And if you want to be cute and get the cash if it breaks the 8-day, you could have an opportunity right around the 21-day, and then right around here is still above the 50-day. So don't chase this up here. You had your opportunity to get in.
Macy's is another key player in the back-to-school space, so they should be a winner this month with sales. The stock has run off of its lows, and it's trading much better, but it's approaching resistant levels. So as a trader, how do you set up in this one?
I was looking at this chart before, and a lot of people ask me, what's a red dog reversal? What's an 80-20? How do you use that as an inflection point? Well, Macy's actually, traded with that perfectly. You take a look at the chart, you'll see that back on this day was May 2nd. Okay, Macy's tried to push through and failed. Look at this outside day. Look at this red dog reversal. It pushed through the prior day high of 41.74. Went as high as 42.17. So the strategy would be is once you push above and close below, you sell your longs, or some guys get short. And if you got short and you put it on at 41.74, you had a stop of about 30 cents. Next day, didn't do much or went lower and held in there, but never went above that level. So if you were a swing trader and that's where your stop was, look at this move you had all the way to the downside that you could have picked and choose where you want to cover. But then look what happened here. Oh my goodness. Another reversal, but instead of being a reversal at the highs, it was a reversal near the lows where it broke below major support below 32.70. So it broke below it, went down to 32.31, came back above it. So right there, that's your long. You have a 40-cent stop, so you're not catching a falling knife. You know where your risk is, and then look what's happened since then. So there are ways to catch inflection points, and right now it closed pretty strong yesterday. It's above the 8-day, it's above the 21-day. It is approaching those old highs, so people that are caught maybe they sell some. So I wouldn't initiate up here, but it's been a very nice move since this reversal here, and both of these bars alone could show you how you need to learn how to navigate stocks, sectors, and the market.
Target has had a great run this year. I think it's your retail stock of this year. It's going to be one to watch tomorrow because we could see them taking market share in the back-to-school season from JCPenney and some of the others. And if they do that, they could beat management sales estimates for this month of mid to low single-digit increases. The stock pulled back slightly after a 52-week high. So what are the levels we should be watching in this stock?
Well, just for compliance purposes, 2 years ago, HD, Home Depot, my retail stock of the year. This year is Walmart. Target I like, but it's not my stock of the year, so I have to clarify that. But it has been something on our radar we've talked about many times as a technical buy and also something to be looking at from the bullish side, but just not my stock of the year. Anyway, you go to the chart and you'll see that this was when it came on our radar. I'm not sure who I was with. It could have been actually Alex back before she left for Bloomberg. Right here, that's when Target woke up. That's when it broke this downtrend. This was your entry. Nice move to the upside after that. Okay, so then since then we had the consolidation. Maybe you were referring to when I was on Bloomberg with a bullish strategy right here, and we said to buy a call spread. Anyway, it ignited again, went higher, and ever since then it's had a nice methodical move. It's getting a little testy up here. I would not initiate up here. Don't initiate. If you're still in it, ride it. It's still above the 8-day, the 21-day, but if this were to break the 21-day, I think you could get a little bit of a pull-in, just like the rest of the market. So at this point, stay with some, but or if you're going to buy it up here, this is your stop. Your stop is 62.70, but overall, it's been acting very well this year, and a lot of these big box retailers have been the place to be.
Costco has been a good stock too, but it's been basing at a higher level for the last 2 months. What's the breakout level we should watch on this?
So on Costco, we've also talked about, again, trying to time these things so people can get in with great entries. You look at Costco, right here was that entry, a nice little bull flag once it broke this downtrend from the highs. Since then, it's continued higher. And then after a nice move like we've seen, it is a mega cap. It needs time to digest. And here you go. Here's your level of support. Here's a higher level of support. Remember that gap? It's held a small amount of it. And now it's still acting like it wants to go higher. It doesn't have the power, but not a lot of things have power this week. So at this point, stay with Costco, above the 8-day, above the 21-day, held the 50-day. So until this range breaks it, which I don't see right here in the chart, I would stay long it. And you could see a breakout if it gets above 97.76, and that's when you'll be in motion for new highs. And that's if if the market's going to take out the highs, this one's going to be along with it.
Okay, well, we're going to take a quick commercial break, and we'll get back into it with consumer staples.
Well, you know what? Everyone wants that now. They don't want commercials anymore. This is the
no
last
commercials?
day. Let's just go straight through. No commercial.
All right, well, let's look at consumer staples because this is a sector that if you are concerned about what Ben's going to say on Friday and what the ECB is going to say next week, and the other European meetings that we have, you might want to take a look at this. It had a nice little pullback last week, but it's holding higher levels. Is this a stock you would consider getting involved in? Or a group, an ETF?
Well, the group is fine. It's not a leading sector, but it's not a lagging sector. So I would go more with individual stocks within this group.
Okay. Well, why don't we take a look at some of the individual stocks? We got Kraft has been a strong stock all year. It had a nice pop after its August 2nd earnings report, and it's been just trading up into the split that we're going to see, the snack company and the grocery company split up in October. What are you seeing in the charts?
I'm seeing a very strong company. Investors on a lot of different time frames getting rewarded every now and then. There's a trade. If you look at it now, I don't see a trade there now because this was when it broke above this resistance. You had a push. This is the retest where you could have got back involved. Then here's where it extended. So now it's still acting well. It's had a nice move from the June-July lows when it tested the 200-day. And at this point, you could definitely stay with it. But again, trim into strength. Buy the dip. Or play the breakout, but trim into strength. And at this point, you could stay with it because it's not showing any faulty signs yet.
Whole Foods has been another strong stock this year. They're benefiting from that healthy food eating craze. Oh, and by the way, they're also completely domestic so that you don't have to worry about Europe with this stock. The Fresh Market reported earnings this morning that beat. They also raised guidance, so more good news for this stock. Is it something you get involved in? How do you trade this?
Well, this one goes with the rule of gaps. Okay, if you weren't in this stock, you saw it gap up. I think it was on earnings, and since then didn't fill it. So if you look at the chart, if you were not in it, here was your gap up after earnings. This looked actually pretty gross before this little reversal here above the 200. But then here was your gap. This is when it changed complexion. You gapped up, never even attempted to fill the gap. So that goes on your go-to list as a strong stock that you could stay with when the market wants to run. And ever since it's been methodically moving higher. And at this point, it's got another nice little wedge right here. So I would say there might even be a trade. So if it were to get above this 98-ish, you're going to see a move above 100. As an investor, if you're in there and you were playing versus gap, you're doing well and it's hovering above the 8-day and looks nice and tight where it could be ready for a cash flow type breakout for traders that want to put this wedge type pattern on their radar.
Now, Coke, not as great of a stock. It's been a breakout failure. It's been trading down for the last month. So what is the key level of support that we want to see in this?
Well, it's already broken many of them, and I want to show you how when momentum leaves a stock, you leave, and why you watch a bull flag for resolution. Sometimes it breaks to the upside, sometimes to the downside, and that's why you have some type of concern when you're looking at base-on-base patterns, because after a few of them, they're prone to failure. So if you look here at Coke, you will see that Coke had a really nice breakout right here. You remember, it gapped up, and it continued to go, strong day, above resistance. And then what did it do? It hovered up here near the highs, flagging. So people were saying, okay, can Coke go again? If it would have went above 40.66, there was a chance that it would, but it didn't. You had your wide range bar right here, which engulfed this upper flag. That was one of your clues to get out of the stock. And then if you didn't get out then, once it broke this or didn't hold this prior breakout, because it should have at least held that and it didn't, so it went below it, retested. You had two different chances to get out here if you were actively trading it. And now you have the 8-day moving lower, you have it below the 50-day, you have this curling down. I really don't see any support until the 200 day. So if you're not in Coca-Cola, wait to see if you could potentially buy it closer to 37. You also see this trend line was broken right here, which was another way out. If you missed this, if you missed that, there you go. Probably some guys actually made money short right here because, it broke this small uptrend after showing faulty action right up there.
Unilever, this has been one of the better consumer staple stocks all year. Why don't we take a look at that chart?
This one looks okay. This one has a big gap, holding above it, been just consolidating, digesting with not much to do. I don't ever hear my traders really talk about this, but if you look at the chart, you will see, look at this big gap up. And ever since it hasn't really done much. It's just been digesting. You now have a big upper range. If you're trading this long, I would just trade it long versus the gap because there's still pent up momentum in this thing. So the low here is 35.30. This is where you're going. The 8-day is starting to curl up. I do think there will be a trade here soon. So that trade gets ignited once it starts getting above 36.20. Above 36.20, you will get follow through. For now, you had that big gap up, digesting the big move. It held the most of it. So the good book says this should continue to the upside.
Let's get into some quick hits. We'll start off with Google. It had a nice movement yesterday. Monday we came in. We talked about it on Monday because everyone was concerned that the Apple patent infringement lawsuit against Samsung was going to come after Google next. But they didn't. You had a strong position on Monday to say stick with this name. It could be a buying opportunity.
Well, I just didn't think that they're going to start going after everyone. They don't want the monopoly talk. They don't want the antitrust. And I think that it was worth looking at that level. And we talked about 660 as a potential area to buy against. And then once you saw the action unfold on that day, you saw that it came off the lows. I know for myself, I made some cash flow. So did guys on my VTF. If you look at the chart here, this was the line I think we put right there saying, look to see if it could hold this upper level. If it holds the upper level, the market's telling you it does not care. Not only did it hold the upper level, it closed strong. And then yesterday in the price point sheet, we talked about it filling the rest of the gap right here above 672, which gave you another 5-point cash flow trade or an entry for a swing trade. And now it'll be interesting to see what's going to happen next because there's a lot of people caught short. You're right at the top of this range. If Google were to get through this 680.60, you're going to see a move into highs. And I still think that this stock's in the running in the next 6 to 9 months or maybe sooner to test the historic highs of 747 as this monthly chart looks really, really bullish in my opinion.
Apple, we got to take a look at. What's the next buy level in this?
Apple is trying to hold. It had the gap up after news. A lot of people sold into the gap up. I took some off there. Now I'm trying to stay with some as it's in this upper range. So if you look here at the daily chart of Apple, you will see that here's your gap up. They didn't go after it with momentum, but look at the move that we've had here. So they've been kind of waiting for the 8-day to catch up a little bit. Yesterday I traded around it a few times, lost a little bit around 673.50. Then I tried it again later in the day, worked a little bit better, but overall very choppy. The last 2 days in Apple, even after the news, has not been great for the active investor. Good for the intermediate investor that stayed the course, or great for the macro investor that's been in this thing for a long time, showing you can pick stocks, you can make money, you can be an investor, which everyone says is dead, which I think is crap. Anyway, you're back to the daily chart, and the next real buy price would be if it starts getting above 676, to 678, and then you have the high here. You can see it a little bit closer on the 5-minute. You go to your 5-minute of Apple to see what's gone on since, that gap up. So for me, I want to just show you this downtrend that's been in place here. So once it starts getting above, and if it can stay above, this 676 and change, I think anyone short will get a little worried, and then you can get a move back to retest the highs here that was set on Monday. If you're risk averse, use yesterday's low as your stop. And that's the micro trade. And I think overall macro, the highs of the year are still not in.
LinkedIn and Facebook are two that you've been keeping your eye on. What's the story here?
Well, LinkedIn had great earnings, and it's just been pulled down by this whole social media mess.
Yep.
So, but it's been one of the chosen ones. You've had 3 quarters now of really good earnings. So it's been trying to hold up after the last quarter. It looked a little faulty, but we said, how much of this gap can we hold? Let's see how we deal with 104. If it starts holding 104, it could get in motion. And yesterday, it started to get in motion. Exactly what we were trying to find a little earlier. If you look at the chart here, it's now above the 8-day, above the 21-day. You look closer here, you see how it held this support, held this gap. So you could have treated this 2 ways. You could have been in tier 1 as it held the gap, or a feeler. And then yesterday, once it started to clear, 106-ish or 107, you add it to it. You know, now it's at around flat. I think that you get another buy price above 107.59. There's no reason why it can't head back to 110. And then if you look at the monthly chart here too, if this group starts to get a little liked, right now it's hated, it's despised. Potentially, we're holding higher. I think that, we take a move back to 115 and make new highs on the year as this company is proving that it has a viable business plan.
Okay, well, those are the levels in the...
one more thing. Facebook.
Facebook, yes.
Very, 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 did I say very?
Very.
Very small chance that we might get some kind of move. The range is getting really tight over the last few days. So if you go to Facebook, granted, it's been horrendous. It's been disgusting. It's been, I can't even say how many words. But the bottom line is, remember this little day right here? Okay, that's when you had that small red dog reversal. It was inching before shorts got worried and you had a little bit of a squeeze. Well, you go all the way down here. If you're not caught in the mess and you're looking for a trade, look at this day right here. This day was that type of day when it broke below the lows of 19, put a low in 1875. So some people are still in there from that red dog reversal. It's getting very, very tight. I would say I don't know what the catalyst could be or what could go on here, but if it starts to break above this little downtrend here with heavy volume above just say 1970, maybe it squeezes up. Right now, I feel like everyone's embarrassed if they say they're long Facebook. So once everyone gets embarrassed about doing something, maybe it changes. So I'm long small Facebook. My stop is going to be 1875, and if I see some kind of crazy volume spike, which I don't know if it's going to happen, but above 1973, I will add. But again, here's my stop. It's calculated. Who knows?
Going against the grain of Facebook. I like it. Well, be sure to check in at the end of the day with Scott and the T3 team for the daily recap.